Thanks, Faizan. Good afternoon to all. I would like to thank the management of Arman Financial Services for giving us an opportunity to host them. We have the entire senior management team of Arman Financial Services represented by Mr. Jayendra Patel, Vice Chairman and Managing Director, Mr. Alok Patel, Managing Director, and Mr. Vivek Modi, Group Chief Financial Officer. Without much ado, I would now like to hand over the call to Mr. Jayendra Patel for his opening remarks, post which we can open the floor for Q&A. Thank you. Over to you, sir.
Thank you, Alok. On behalf of Arman Financial Services, I extend a warm welcome to all our Q4 and FY23 earning conference call. With me, I have Alok Patel, Joint Managing Director, Vivek Modi, Group CFO, and representative from SGA Investor Relations team. I hope everyone has an opportunity to go through the results, press release, and the presentations for the quarter and full year ended 31st March 2023, uploaded on the stock exchanges and on the company website. You must have had a chance to go through it. The tightening of the financial conditions on account of aggressive monetary policies, the slowdown in global economy, the turmoil within the global banking system, and the rising inflation have dampened the global macroeconomics. Despite such challenges and uncertainties, the Indian economy has shown remarkable resilience and signs of growth. As Reserve Bank of India taking proactive steps to tame inflation, monetary and credit conditions, a rebounding credit environment has been witnessed in the economy. This bounce back is accompanied with a notable upswing in momentum in the rural economy, which has led to an emergence of a robust credit demand. The microfinance sector has encountered several challenges in the past. However, a significant inflection point occurred with the implementation of revised guidelines by Reserve Bank of India for NBFC MFIs. These new guidelines have played a pivotal role in restoring the growth trajectory, and the impact of these guidelines have installed a renewal sense of confidence and optimism in the microeconomic lenders as well as borrowers. Overall, the revised RBI guidelines have ushered in a new era of growth and sustainability for microfinance companies. They have addressed the sector's challenges, provided a conducive regulatory environment, and paved the way of continued expansion. As a result, microfinance companies are better equipped to fulfill their mission of extending financial services to the underserved and marginalized sections of the society, contributing to last-mile financial inclusion. The improved environment of credit has helped the economy record a robust growth in assets under management. AUM for the year ended 31st March 23 stood at 1,943 crore, recording a robust growth of 58% year on year. Of this, rupees 1,943 crore AUM, around 84% is from microfinance business, 13% is from MSME business, and 3% is from two-wheeler business. On a new technology and systems are now in place, and this has helped the company better its efficiencies, lower the operational risk, and enhance customer experiences. With this resurgent demand and greater emphasis on sourcing, underwriting, and technology, the company has demonstrated robust growth across all its businesses. The Q4 FY23, we recorded the highest ever quarterly disbursement of rupees 631 crore with a growth of 87% year-on-year and 32.1% sequentially for FY23. The disbursement grew by 73% to rupees 1,767 crore, 1,767 crore from 1,023 crore. Further, the growth was also supported by our newer states of Bihar and Haryana. Much of our delight, Bihar is doing amazingly well. We are banking on it to continue doing well in the future too. Additionally, we are exploring opportunities to expand its operations to new geographies and tap into new customer segments and diversify the revenue streams. During the year, we opened 44 new branches, taking our total branch count to 336. With this, we have a presence in 8 states and 120 districts. We remain focused on contiguous expansion in existing states with the potential to take our footprint to another 2 or 3 states in the medium term. At Arman, it is our constant endeavor to serve the low-income, underserved people of the nation who have little to no access to the formal banking or financial services system. In accordance with this, we have started a pilot of individual business loans which accounts for 2.1% of the total AUM. So, as rural customers graduate from being long-time MFI customers, there is a strong demand from some of more advanced customers to break away from the group-based JLG model and move towards individual loans. Our micro enterprise and IBL segments are well placed to take advantage of this market demand in the long run and offers a long-term potential to scale up our business in other rural loan products. While we are taking a cautious and calibrated approach so that we understand the customers better, the credit cost so far appears to be similar to microfinance products despite not having group guarantees. There is a higher operating cost involved with individual loans, but the higher margins more than offsets it. In the long run, the goal is to reduce operating cost by transitioning to a tech-driven organization. We have made significant progress in our digital improvisionization efforts, focusing on enhancing our operations and providing an exceptional customer experience. Key initiatives include digitized customer onboarding at their doorstep, automated underwriting with robust rule engine, enhanced online security measures to protect customer data and safeguard against cyber threats, advanced data analytics and process automations like facial recognition, OCR verifications, and automatic data entry through barcode and QR code scanning. We have implemented a complete paperless journey from onboarding to dispersal and collection. These efforts demonstrate our commitment to technological advancement and innovate solutions for our customers. We appreciate the dedication of our team and will continue to embrace digital transformation and strive for excellence. Now, coming to the consolidated financial performance. The gross total income for FY23 stood at rupees 424 crore, registering a growth of 80% year-on-year on the back of improvement in yields across all segments. During the year, net total income registered a growth of 73% to rupees 251 crore as compared to 146 crore in FY22, representing a cheaper availability of funds. Our NIM, our net interest margins for FY23 stood at 15.9% as compared to 14.2% in FY22. In this financial year, the company has recorded the highest ever profit after tax of rupees 94 crore with a growth of 196% year on year. This was mainly on account of improved interest income, optimization of operational cost, lower provisioning requirements, and improved asset quality. Our continuous emphasis on collections and underwriting process helped us improve our asset quality. As of 31st March 2023, our gross non-performing assets stood at 2.7%, representing a year-over-year improvement of 170 basis points from 4.4% and a sequential improvement of 60 basis points from 3.4%. For FY23, the company has conservative provisioning policy with a provision for the year standing at 45 crore. This takes the cumulative provisions to 67 crore, which is 3.4% of the AUM. Our collection efficiency improved to 98.3% for FY23 as compared to 91% in FY22. Collection efficiency for the month of April 2023 for various segments stood at microfinance segment, we have 98.4% collection efficiency. For MSME, we have 98.5%, and a two-wheeler segment, we have 96.9%. Now, coming to the borrowing profile, as on 31st March 2023, company has total borrowing worth rupees 1,937 crore. This includes the debt component split of OCRPS and CCDs as per Ind AS of rupees 49 crore. Of the total borrowing, 35.3% is through banks, 31.3% is through NBFCs, 14.7% is through debt and NCDs, 16.6% is through direct assignment of the off-balance sheet liabilities, and the rest is borrowing through DFIs like NABARD, Mudra, and SIDBI. As on 31st March 2023, the company has healthy liquidity position with 185 crore in cash, bank balance, liquidity investments, and undrawn CC limits. Additionally, company has rupees 218 crore undrawn sanctions from existing lenders. The company is well capitalized with capital adequacy ratio for the stand-alone business at 32.61% and number is 25.62%. Lastly, in the fiscal year 2023, our company accomplished several noteworthy milestones that have propelled our growth trajectory. Latest one being in January 2023, when Number of Finance Limited was assigned the MFI 1 grading by Care Rating Limited. And let me also tell you, MFI 1, there is nothing above MFI 1. So we are proud of that. And another such achievement was the successful fundraising of rupees 115 crore via allotment of CCDs and OCRPS on a preferential basis. The infusion of these funds has played a pivotal role in facilitating our target growth objectives. We believe that favorable regulatory environment coupled with sustained growth momentum witnessed in recent quarters will continue to support our organization's pursuit of achieving a target assets under management. The supportive measures taken by the RBI have bolstered our confidence and reinforced our belief in the long-term growth potential of the microfinance industry. With this, I would request the operator to open the floor for any questions and answer session, and I thank you all for giving me a time. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Concall from Future Securities. Please go ahead.
Hello, sir. Thank you for the opportunity and congratulations on the good set of numbers. So I had a couple of questions relating to our branches. So we have opened around 45 branches this year. So are we seeing that same kind of trend next year? And so another relating to the branches is that how much time does it take for us to break even and a branch, and can you give us some branch specific metrics on that same matter? Thank you.
Yeah, so as far as our plans this year, we'll probably open somewhere in between 50 to 70 branches for microfinance and MSME, for which we already have already on the way to open about 32 of them. The balance of which will probably get opened in the next quarter. As far as break-even goes, typically we reach break-even when the number of customers gets to about 600 to 800 customers in any particular branch. And that depends, it ranges from anywhere between 4 months to 8 months to get there. So on average, you can say we usually break even between 6 and 8 months.
And sir, I had another question. That what kind of demand are we seeing from the two-wheeler and the MSME segment in general? And are there any specific regions that we are seeing a greater demand from? Thank you.
Yeah, so I think as far as MSME goes, I think there is a consistent demand. It's just a matter of, it's a different product than microfinance, so it requires a lot of work to find the right kind of customer, to assess him in the correct way, to figure out his cash flows in the correct way, and to disperse the loan. So typically speaking, our rejection rates are average around 70% in the MSME segment. And demand has been quite strong, at least until March to April. In the last couple of months, it has gone down a little bit as far as the demand goes. But otherwise, last year it was quite strong. In the two-wheeler, the demand unfortunately has not picked up to pre-COVID levels or even 2019 levels. I think the latest statistics that I have, overall, if you compare 2018 or 19 two-wheeler sales versus what it was last year, it has gone down significantly, almost 40% or so, and it has not recovered. So overall, two-wheeler demand is not as strong, unfortunately, in the market, although it has been improving slowly quarter over quarter. And what was your other question? What was the other part of your question?
Are we seeing any specific demand from any region for MSMEs and two-wheelers, the greater demand?
So for two-wheeler, we are operational only in Gujarat, so I could not comment on that. For the MSME side, we do see, if I had to rank it, I would say Gujarat is probably having a higher demand than Maharashtra or MP. But it's not a huge difference. Overall, there is a strong demand in multiple states in the MSME. In MSME also, we are started operations into Telangana. So we have opened up our first branch, I think, just a couple of weeks back. And that was for numerous strategic reasons, which I can get to later on if you like.
Okay, sir. Sure, sir. Thank you for your time.
Thanks.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Srinath V. from Bellwether Capital. Please go ahead.
Hi, Alok. Congratulations on the fantastic set of numbers. First, wanted to understand this gain on assignment of financial assets of 12 crore. So how should we look at this particular line item from is it to be seen as a slightly more, one time in nature, or is this a more recurring line item? And want to find out that in like calculation of yields, that's 36.9% in our MFI, would this 12 crore kind of be factored into that calculation? What would be the yields at which we are giving incremental disbursements in microfinance? Broadly, if you could help me out with all of this.
Yeah, so I think the accounting side of the DA, I think Vivek can explain a little better than I can. But that being said, as per Ind AS, if you're doing a direct assignment transaction, which means it's not a PPC type of transaction, or it does not have DA transaction which has no kind of recourse. So by accounting standards, we have to upfront recognize the profits, because essentially you have sold the assets, right? You have maintained the servicing rights, but you have sold the assets completely without any recourse. Okay. So it's like selling any other asset. So you have to recognize the profit of it upfront because you have sold it. Now, whether that acts as a challenge in terms of looking at this as a one-time thing, or whether it will create a future impact in the P&L in terms of apples-to-apples comparison, yes and no. The thing is, as you grow larger, the DA transactions happen more in a consistent basis. So you might be doing more or less every quarter, but you'll be doing something or another every quarter is what our expectation is. So by that way, this is something that you should be seeing more regular of. But also, more DA transactions will happen in the fourth quarter versus the first quarter. That's just the nature of the business. Overall, it's a very lucrative thing for us, because not only do we get added margins for it, but also we offload some of the assets from the balance sheet, so it allows us to, improve our capital adequacy ratio. I don't know, Vivek, if you want to add on.
And Srinath, just to kind of connect the dots, in Q3 we saw about 100 crores of DA transaction. In quarter 4 we had we almost doubled up. So there is a good possibility, and overall the market is kind of seeing a lot of DA transactions all across the sector. So hopefully things should be fine. But yes, this can have the quarter-on-quarter aberration. Would say. Yeah. Coming to your second question that you had regarding yield, the upfront profits have been taken into account for the quarter 4 yield calculation. In terms of our general yield or the lending rates to MFI borrowers, they are anywhere between 24% to 27% is our usual product price.
Got it. And on these yields, how will the yields kind of play out? Because now with the, deregulated pricing, and of course there's a back book which should still be in the previous regime. So, where do you see yields kind of moving, let's assume that RBI is a status quo for the next 12 months and so on. So how do you see yields trending? Do you see yields at book level trending towards 27-28% over the next, say, 6 to 8 months or 1 year, broadly, to understand the mix change between the old book and the new book?
No, I think there is not, largely speaking, there is not a lot of old book, because we have grown and these are very short-term kind of loans. So we increased our rates in April of 2022, and from that the book size has also increased. So I would say that overall weightage will be probably less than 30%.
Yeah, so 70-30 is the new to old kind of a
new to old ratio.
Okay.
So it will not have a very, very large impact. And so while you might see a marginal increase in the yields, it will not be very large unless we decide to increase the rates to the customers, which we have no plans to do so now, as of this moment.
Got it. A quick one. So in this, 1943 crores of assets under management, what would be under the direct assignment? What part of the AUM would be, or that's not part of this number itself since we sold it off our book? How does it work?
It's part of the AUM. It is part of the AUM.
It's part of the AUM. The exact amount would be 311 crores.
So that's the book which is, so in Q1, the 311 crore will not accrue any interest income in our book, right? Fair understanding?
Yeah, fair understanding.
Okay, perfect. One last question, Alok. Just wanted to find out on our new product innovation, where are we? Couple of products that I vaguely remember would be on durable financing for the slightly more premium customers within your, deep rural circles. The other product would be rural two-wheeler, and the third one would be, secured. I'm using secured more loosely, meaning I'm not saying hypothecated, but you're taking a property document and probably looking at a 3 to 5 lakh kind of ticket size product. And if I missed any product, if you could broadly, help us understand from the product side, how will things look, about 12 to 18 or 2 years later?
Yeah, so I think we have made some strong headway into the IBL product, that is the individual business loan product, which is basically an individual microfinance loan that is striving to be cashless, which means that we are dispersing, obviously all loans we disperse cashless, but the collection also is cashless. And we are trying to target the more, I don't want to say affluent, but people who have graduated from microfinance and are somewhere in between mainstream and micro, so to speak. So that is about, I think, 2 to 3% of the portfolio now, and that is doing quite okay. And realistically speaking, that is the future really. I mean, if you look down the next 2 to 5 years, I think overall microfinance will start. I mean, our prediction is that microfinance will continue to move away from the group-based lending and kind of evolve into a more individual lending. So that is basically making sure that we are ready for that. In terms of consumer durables and other kind of products, I mean, we were doing LAP loans and other kinds of products, insurance products and stuff. Not a lot of headway in the consumer durable side, just because initially speaking, when the rates were restricted by RBI and the margins were capped, it made a lot of sense to do these kinds of products. Today, in a situation where there is, it's a matter of supply and demand and competition that sets the rates. The consumer durables are kind of a little hard to sell to the customers. In terms of the LAP loan, we have something on paper. We are working on the pilot. We still have to make headway into it. It's kind of a difficult segment to break into, especially if you're trying to do in the rural areas, which we kind of learned the hard way, that the documentation is quite shabby. And, we have not, unfortunately, not been very successful to break into that in the rural areas.
But from what I seem to understand in talking to these guys is nobody actually, ever triggers a collateral, right? So it almost seems like a threat that I have your paper with me. So, given that as a broader context, don't you feel that extremely robust legal system may not be the most, important part of this particular product, because nobody seems to be, repossessing any of these collaterals in the industry?
No, you are correct. You are correct. And I guess that is a debate of a different forum. But, our conservative nature is kind of sometimes gets the best of us. But I think that's probably a debate at another time, that how anal do you want to be about the documentation? So where do you draw the line, right? I mean, that is the question. And I think that is an excellent question. Something we'll have to ponder more seriously down the road.
Thank you, Mr. Srinath. May we request that you return to the question queue for follow-up questions. Participants, to ask a question, you may press star and 1. The next question is from the line of Savi Jain from 2.2 Capital Advisors. Please go ahead.
Hi, Alok. Congratulations on the numbers. You mentioned you are not seeing a lot of traction in the individual business loan, the secured loan. Is that what you mentioned?
No, not the individual business loan is different. That is non-secured. We are seeing traction there.
Okay.
I think what Srinath was asking was the kind of pilot that we are trying to start on the micro lab side.
Okay.
So that's what I was saying, that it's not a question of traction. It's a question of the paperwork that we are getting from the customers, especially in the rural areas. And again, I don't want to spend too much time on discussing that on this forum. But I think a lot of our competitors also are facing issues in the rural. There has been headway that people have made in the urban, semi-urban kind of places. In the rural, the documentation for the properties remain kind of shabby. And that is, again, where you draw the line, If you are just going to accept that the documents at face value, then you might as well do an unsecured loan. Or on the flip side of the coin, it is just a scare tactic, right? That you are never going to actually try and repossess, which, of course, even in the best of documentation, that is not the intention, is to, repossess the collateral or repossess the property. So that is the challenges, but I think this is quite a long discussion, and I don't think this is the right forum to discuss it.
Yeah. Maybe in the southern states where there are a lot of skilled players in this space, is it that the properties there have much better paperwork as compared to, say, some of states like Gujarat? Maybe that could be another reason why there are
possibly. As far as my knowledge is concerned, in Gujarat specifically, there are no players in a large way that are operating in the rural segment, in the 3 to 5 lakh kind of ticket sizes in the lab side. So people are facing similar challenges to us. So it's just a matter of cracking those challenges.
In terms of asset quality, what are you seeing? I have read somewhere that Maharashtra is facing a lot of issue. And, if I look at your credit cost also, it has been higher than what it has been pre-COVID. So what is the credit cost that you are looking at from a business as usual, point of view next year, FY24? Is it going to be around 3%? And what is the early, signs, any stress that you're seeing in any geography?
So your first question was about Maharashtra. So Maharashtra has been badly impacted during COVID, and throughout COVID, it was probably one of the worst impacted states that we operate in. And, in a pan-India level also, it was one of the worst states. If not the top one, then at least in the top 3. So that has been gradually improving. But, there was a lot of room to improve. So even in today's scenario, I think if you look at overall stress levels, they'll be highest in Maharashtra. But we are still a lot better than we were a year ago or even 2 years before that. So it has been improving consistently. But if you do a comparison state to state level, obviously Maharashtra is probably has the lowest in terms of asset quality goes. In terms of credit cost, I think I've been very open in sharing in all of these Concalls and other kinds of discussions that we are not going to see the pre-COVID level loan losses, and that industry is over. That is not going to come back. So if you are going to compare, even on the best years, compare loan losses that we had, in 2017 or 18 versus in 23 or 24, it's not going to be comparable. The days of 1% loan losses are behind us, and I think we'll just have to accept that. And that is fine. That is not, I think as an industry, we can absorb higher losses than that, especially in today's scenario with the RBI new circulars and everything coming out. It will be difficult for me to say what to expect really, but 2.5% ballpark figure would be something that you would have to be prepared for in the long run.
And do you have any business plan drawn up for FY24 in terms of AUM target? What are you looking at?
Typically, we don't give. Typically we don't give that. But I think what we always say is that our CAGR has been about 35 to 40% since the last 10-12 years. And that is the growth that we try to achieve on a year-on-year basis. So somewhere in that neighborhood, 35-40%.
Okay.
Thank you, Mr. Jain. Does that answer your question?
Yeah. Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Riya Soni from Soni Investments. Please go ahead.
Hi, sir. Thank you for the opportunity. I would like to ask 2 questions. So, firstly, Gujarat still accounts for 30% of the total AUM. So, do we have any plans to de-risk this portfolio going ahead?
I'm sorry, what is the question? What is 30%? Gujarat.
Gujarat still accounts for 30% of the total AUM. So do we have any plans to de-risk the portfolio?
No, it has significantly been de-risked. I think if you look at the Gujarat portfolio in, let's say, FY7 or in 2017, it was almost 80% of the book, right after demonetization. So we had already looked to de-risk it, and we are continuing it to de-risk it. Overall, concentration risk on a state-to-state level has been falling consistently. So that is part of our plan overall. And I think if you look at branch openings also, Gujarat has seen much lesser in terms of branch openings than we are doing in the other states. So it would be difficult for me to give you a percentage of what the targets are, but overall geographical based de-risking is a consistent endeavor for us.
Okay, and secondly, you mentioned that the states of Bihar and Haryana are doing well. So, what will be the comfortable AUM levels for the states, and how much will they contribute going forward?
What is the AUM of Bihar right now? Is that what you are asking?
Yeah, going ahead, what would be the comfortable AUM level that we target?
If I get your question right, if we look at the states that we operate in, I think we look at some of these states as the larger states, which could be Gujarat, an MP or a UP, and Bihar probably comes into that line. So over a period of time, Bihar's AUM will consistently keep on increasing. Right now, Bihar probably is bundled up in the 9% others, which is right now less than 5% of the total AUM. But overall, in terms of the branches that we've already started in, Bihar is about 27 branches. So we're expecting it to be to keep on growing steadily, but kind of giving a specific figure as to what percentage it would eventually have is a very dynamic situation, because all other states also are important.
Yeah, all other states are also increasing to that extent. So, I think Bihar right now will be somewhere in the neighborhood of 7%, or 6 to 7% of the portfolio. This year, maybe we can expect it to reach somewhere around in the 12% to 13% neighborhood, roughly speaking.
And what about Haryana?
Haryana is a lot slower. We don't have that many branches there. So Haryana will be only about 3% at this moment. But it's only about 15 branches that we have right now. And the scope of opening further branches in Haryana is limited, being a slightly smaller state and also being slightly more wealthier state where the target market is a lot smaller. So it's picking up fairly well given the fact that we have 15 branches, but I don't think that it's going to be a very meaningful part of the portfolio. Definitely not 10% plus in the coming few quarters or years.
Okay, sir. Thank you. That answers my question.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Karan Mehra from Mehta Investments. Please go ahead.
Yeah, hi. Thank you for the opportunity. So just a couple of questions from my end. First is we have been investing in technology recently. So I wanted to understand that what was the quantum for the same and what kind of cost efficiencies will kick in, and where do we see our capex to ATA come down?
Mostly in terms of technology, most of our technology we are working on a SaaS model, software as a service. So there is not a lot of upfront investment, might be 50 to 60 lakhs in total. But largely we pay on either a per customer level or a per disbursement level or on a portfolio level. So that amounts to, I don't know, somewhere in the neighborhood of 2.5 to 3 crores a year is what we are paying for our LOS LMS system. Probably more this year.
Because it's kind of linked to the overall portfolio and the number of branches and the users.
Yeah.
But again, in the larger scheme of things, yes, it kind of gives the optimization. It kind of starts reaching the optimization as we kind of keep on growing the portfolio.
Right.
Okay. And so do we see more room to increase our ticket sizes, or will our growth come from the client addition?
We have no plans currently to increase the ticket sizes. If it does happen, it might be in the third or fourth quarter. So largely for most of this year, the plan is to add more customers and add more branches. There might be some marginal increases in ticket size, but nothing too crazy, maybe 7 to 10% here or there, but nothing that meaningful.
Understood. Thank you. That answers my question. Thanks and all the very best.
Thank you.
Thank you. The next question is from the line of Hemant Dhingra, an individual investor. Please go ahead.
Yes, sir. We just wanted to know that in microfinancing, the people who are borrowing this money...
Sorry to interrupt you, Mr. Dhingra. The audio is unclear from your line. Please use the handset mode.
Yeah. Can you hear me?
Yes, sir. Go ahead.
Yeah. In the microfinancing, when you are giving these small ticket size loans, what are the people using it for? What is the what is the money used for, the capital?
Well, I mean, so in the microfinance space, the overall goal is to increase household income. So you are giving the loan for some kind of income generating activity. Now, what that income generating activity is a vast variety. For example, the largest use of our funds goes towards cattle. So they get a loan, buy a cattle from it, generate milk, sell the milk, generate cash flows, and in 2 years their loan is done and their cattle is theirs. So that is the largest one. But otherwise, it's a very diverse set, including stuff like, there will be kirana stores or street side vendors or, small ticket type garment makers or, there's a very variety of different, there'll be hundreds if not thousands of different kinds of activities that the rural people are engaged in.
Agri-waste product, food processing units or smaller cottage industries for that. So, but largely about 60-70% of the portfolio is covered through the animal husbandry kind of a product.
Yeah, I would say 40% is covered through that. Like allied agri. 60% will be others.
Farming that's going to increase in UP, Uttar Pradesh, the northern belt. So any plans
to... some audio loss from your line. Please repeat your question.
So what I'm saying is that we've been hearing that there is going to be some growth in the dairy farming, agri farming, on the same lines of, using the loan to buy cattle and then using the milk and selling it in Uttar Pradesh, UP. So is there any plans to intensify that sector?
So UP is actually one of the largest states that we operate in terms of microfinance. So Gujarat might be on an overall basis, I guess. But from a perspective of only microfinance, about 30% of our book is in UP, I believe. Gujarat will be about 24%. So, in fact, the plan is to kind of reduce our overall dependence on UP. But let me tell you that UP has been, since COVID, even during COVID and post-COVID, has been one of our best performing states. And perhaps it's because of the reason that you are saying, amongst multiple other reasons. But we are extremely happy with UP's performance. And, touch wood, hopefully that continues to remain so.
Thank you.
Mr. Dengra, does that answer your question?
Yeah, thank you so much.
Thank you. The next question is from the line of Amit Jeswani from Stallion Asset. Please go ahead.
Hello. Yeah, hi, Alok. Thank you so much for the opportunity. First of all, congratulations on your journey. It's been spectacular for the last 7, 8, 9 years. Alok, my first question is on how do we recognize when we sell an asset? We've sold 300 crores of assets. Did I hear it right this year?
300 crores it's a direct assignment. So, we sell assets all the time with PTCs and stuff. Specifically for direct assignments, it was approximately 300 crores.
Got it. So these assets never come to our books? Is that, can you just explain me how does this entire thing work? Sorry.
Yeah, I can definitely explain to you. Or maybe Vivek, you can explain better since you did the...
So, Ashish, what happens is that you created assets in your regular course of business. Then, especially for the PSL, the priority sector lending requirements, banks and lenders are the typical clients who would want to buy such portfolio because this portfolio gets kind of de-recognized from my loan book and is kind of recognized in their loan assets. So it kind of adds to their number of client service and all that kind of stuff. So essentially you create the book first, handhold it for about at least, there is an RBI guidelines based on which you can sell off these assets. They need to be seasoned for at least a period of 3 to 6 months and so on and so forth. There's a matrix for that. And post that, you're kind of selling it off. So you're handholding those customers. And post these sales, you keep on servicing these loans. That means you keep on doing the collection on these loans and kind of keep on making the payouts to the investor or the buyer for this product.
It's not a very simple process because, there'll be a lot of scrubbing that is being done by the bank. There'll be we have to sign a servicer agreement. Customer will not know any difference, to be honest. The customer will not know that asset has been sold, because we are servicing, we are actually collecting. But whatever we collect, we are selling into the bank. And in return, the bank is giving us servicer fees for servicing those.
Financing. And essentially, the other thing that might come to mind is these customers will keep on coming back to us for the next loan.
Right.
So it's not that it has been sold to Bank A. The Bank A will have an access to these customers.
No.
The access to the customer is retained by.
Well, if they did have access to the customers, they wouldn't buy the portfolio.
I want to explain to him, Alok, that whatever is coming in next 2 years,
yes,
it is being collected today, and
no, I mean, yeah. So the recognition of the income from the sale of these assets has to be recognized through NDS based on a certain formula. So that's why you see that on the balance sheet. I don't know if that answers your question.
Yeah, I got that point. My more important point was assuming we have 300 crores of assets that we have done direct assignments. Okay, assuming the interest rate is 24%. Okay, I'm just taking it as a this thing.
Right.
We in a year we were expected to make 72 crore rupees as net interest income, right? Yes, 24%, 300 crores. Now, if we sell this asset at, let's say, do we sell it at, let's say, 27% yield, or how does it work? Like that entry I'm trying to understand.
So we'll sell it at, let's say, 12%, right? So instead of having 72 crores, it will be half of that, right? So it will be 36 crores.
Got it.
That the bank will gain from that. And it's off-balance sheet debt, right? This is
so the balance 36. In the same example, the balance 36 is the income that you will, over a period of time, be able to collect from the customers, and it's for you to keep, kind of a thing.
Got it. If our cost of capital is 12% and we sell the loan at 24%, the 12% in gains that we make gets recognized upfront, and the 12% cost. Got it. Thank you so much. That's about it. Thank you so much. I have one more question.
Yeah.
Sorry to interrupt you, Mr. Jeswani. May we request that you return to the question?
No, let him continue. It's no problem.
Okay.
Please, continue.
Thank you so much. Just one question on the fundraising part. We are now at 4 times debt to equity. In the past Concalls, you've said that 5 is the cap. Is that the right metric to go forward with?
Cap is a little harsh word. There have been times we have gone below or above 5 as well. But we have sufficient capital right now to reach about 2,500 crores without doing any DAs. If you do direct assignments, obviously a portion of those assets go off book and your debt equity ratio improves. So if we can, let's say if you do another 300 crores or 400 crores, we can push the AUM to about 2,900 crores.
Right.
But that said, we'll probably not wait that long, and at around 2,500 crores will likely raise more equity. At least that is the plan. But let's see, the best laid plans are always subject to a lot of other factors. So let's see how that works out.
Alok, sir, ROE is already 31%. So even if you grow at 35-40%, your debt to equity won't move a lot unless you plan to grow at 60-70%. So I would be happy with that also. But thank you so much, Alok, for your time today.
Thank you.
Thank you. The next question is from the line of Shubham Ajmera from SOIC Ventures. Please go ahead.
Yeah, hi. Thanks for providing me the opportunity. Sir, our journey over the last few years has been highly successful. Like with us, we are achieved around 2,000 crores of AUM this quarter, which is an outstanding performance. I would like to hear your thoughts on the recent departure of our key personnel. So in order to ensure continued growth in the future as well, so what kind of highly qualified professionals with the strong background we are seeking, as it is also important for us to professionalize the board for the next leg of growth from here onwards?
So I think you're talking about the departure. Are you talking about the Chief Operating Officer?
Yeah, Chief Risk Officer.
Chief Risk Officer has not spent a long time at Arman. He came from a banking background, retired from a bank, and many NBFCs of my size or even much larger sizes than me don't actually have a CRO function. For us, having a CRO was something just a part of our culture that initially the promoters and the directors only were handling the risk function, but we thought it was necessary to formalize it, document everything, and have a permanent CRO function. Now, the current CRO, he has certain obligations in his hometown with his family obligations in Hyderabad. Chennai, I forgot. And so he has to move back to Chennai. Now that is unfortunate, but he has been helpful to at least create the risk framework or made a good headway in the risk framework for us. And we are interviewing other people for the position. He's still on notice period, has been on notice period for the last few months. We are parting on absolute good terms. There is no problem there.
Yes, that's perfect. He promised me yesterday evening only that if his family matters is settled, he will be happy to come back to Ahmedabad.
Yeah, absolutely. Now, in terms of the HR itself, I couldn't agree with you more that when you are running such a large operation with 6.5, 7 lakh customers, 3,000 plus employees, really this business is more about managing HR than managing loans. So finding the right people, retaining the right people, remains one of our key strategies and also remains one of our, key jobs rather, if you want to put it that way. And so we do take measures to do that. Obviously, we don't run a kind of a boiler pot kind of a culture. We have a very employee-focused culture that we have created, and we try to do the best that we can. Our employees are very loyal to us. I'll just give you a few examples, right? So we had a very successful ESOP program. We are going to redo that. So I think you'll see that coming out in the next couple of days of creating a new ESOP pool, the last one being very, very successful. Other factors also help quite a bit for loyalty, such as during COVID, for example. We did not lay off a single employee. We didn't cut a single employee's salary, whether upper management or lower or field executives. All of the companies, all of our peers were doing just that. They were laying off staff. But that was not part of our culture. And we knew that once the things improve, we are going to need the people to go and collect the money. And so that helped us quite a bit. And I think if you look at our overall asset quality in comparison to our peers, not the only reason, of course, but one of the key reasons that we did better than our peers was because of our HR.
So why don't you give an example, Alok, that all the state heads are with us from the inception of the company. They have started as a simple field officers or a credit officers, and now they are state heads. So we have a policy of promoting people from within the organization,
right,
and which has helped us a lot.
Right. And that's absolutely correct, what he said, that there are many such factors like this, such as internal promotions. But, of course, it's a constant endeavor to keep people focused and motivated and retained and everything.
Yeah, understood. Thank you so much, sir. That's all from my side.
Thank you. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to the management for closing comments.
Oh, thank you very much, everybody, for joining us, and hope you have a pleasant day. If you have any questions, you can always reach out to our investor relations team at SGA, and hope you all have a pleasant evening. Thank you.
Thank you. Thank you.
Yeah. Thank you. Ladies and gentlemen, on behalf of Monarch Network Capital Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.